Were you aware of the dates to be noted for the upcoming Tesla stock split? A lot of retail investors have been looking forward to the said split. Stay tuned and keep watching to find out more about this. With a lot of people arguing that Tesla stock is overvalued, most retail investors cannot afford the current price per share, thus the much-anticipated Tesla 3-for-1 split. While it does not change the value of the stocks, it will be made more available to more people today. You will see these important Tesla stock split dates that Tesla stock investors should be aware of. What is a stock split, according to Forbes? A stock split is when a company's board of directors issues more shares of stock to its current shareholders without diluting the value of their stakes. A stock split increases the number of shares outstanding and lowers the individual value of each share. A stock split is cosmetic and could mean that smaller investors feel they can afford the stock, but those investors are minuscule compared to major institutions. Many brokerages already offer investors fractional trading allows small investors to buy a slice of seemingly expensive stocks. Stock splits don't change the value of a company. For example, investors in a company with a stock trading at $100 that does a 2-for-1 stock split will simply own two stocks worth $50 each. The value of their two new shares is the same as their prior single share, yet companies that engage in stock splits often outperform the market, according to Reuters citing Bank of America research. This could be due to investors buying shares in a company after a split because of the perception that the stocks are more affordable. Companies whose stocks have risen to high prices, such as hundreds or thousands of dollars a share, often turn to stock splits to make the securities more accessible for individual investors. When a business splits its stock, it distributes additional shares to its shareholders at a specified ratio. Existing shareholders will hold more shares after a stock split, but the price will decline according to the stock split ratio. However, a stock split does not affect the aggregate market value of all shares. If a firm believes that the price of its shares has increased to the point where the average investor cannot purchase them, it may split its stock. It can be noted that Tesla announced its plans for a split earlier this year in a 14F filing submitted to the SEC. Tesla described its intentions to split its common stock by a 3-for-1 ratio, which will triple the number of available shares and split the price by 1/3 on the day the stock split takes place. This move does not affect the valuation of the company. It simply increases the number of common shares available for a publicly traded company while decreasing the price to make shares more affordable for investors. In the said filing, Tesla stated that the primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend. The stock split, they further added to say that as of June 6, 2022, we have 1,036,390,569 shares of common stock outstanding, and the current number of authorized shares of our common stock is 2 billion, which is insufficient to effectuate the stock split. Our board needs to approve the stock split subject to and contingent upon stockholder approval of the authorized shares amendment. According to them, this move will make the ownership of Tesla stock more available for both employees and investors alike. It is commendable that this move is partly to make its shares more accessible to retail investors. The said announcement came after the company's shares shed 42% of their value this year. Shares of Tesla were up by more than 1% after hours, having closed at 696.69 on the day of the announcement. While this value appreciation has led to our employees benefiting enormously through the years, we want to make sure that all employees, no matter when they join, have access to the same advantages. The filing said. In the same filing, the company wrote about the proposed stock split. Our success depends on attracting and retaining excellent talent, and that highly competitive compensation packages offering every employee an option to receive equity help Tesla to do that. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity. In the recent shareholders meeting, Tesla shareholders voted on a proposed 3-for-1 stock split and approved it with a strong majority over 15 million shares, with just 9 million shares against the vote, increasing Tesla's authorized common shares from 2 billion to 6 billion. Tesla reports that it had just over 1 billion common shares outstanding as of June 6, 2022. The EV company then announced that it is moving forward with its 3-for-1 stock split and that the stock dividend is coming on August 24th. Tesla's board issued a press release to announce that the stock split will take place on August 24th for all shareholders of record on August 17th. Would you be inclined to buy Tesla shares during the impending stock split? Let us know what you think by leaving a comment in the comment section below. According to the press release, Tesla announced that the board of directors has approved and declared a 3-for-1 split of Tesla's common stock in the form of a stock dividend to make stock ownership more accessible to employees and investors. Each stockholder on record on August 17, 2022, will receive a dividend of 2 additional shares of common stock for each then held share to be distributed after the close of trading on August 24, 2022. Trading will begin on a stock split adjusted basis on August 25, 2022. Tesla wanted a stock split since they put emphasis on the thought that attracting and retaining top talent is the primary motivation for seeking to split its common stock. The company says that unlike other manufacturers, it gives every employee the opportunity to receive equity. Tesla notes that from its last April split in August 2020, the date of the proxy statement on June 6, 2022, the price of its shares rose by 43.5%. Since then, it has continued to advance, though the stock is down roughly 20% this year amid the wider market sell-off. The leading EV maker has still seen its shares surge more than 200% since the last stock split in August 2020. During the last Tesla stock split in 2020, Tesla stock was trading at around $1,300 a share, but the stock split announcement sent its stock price surging to a record high of $2,000 a share. The split resulted in the price per share being reset at around $460 and a valuation of about $430 billion. The stock grew quite fast following the 541 split, with Tesla roughly doubling its valuation over the next year. It can be noted that Tesla reported mixed second quarter earnings last month, which largely beat analyst expectations. Production took a hit, however, worrying analysts as the company was impacted by ongoing supply chain disruptions, as well as a factory closure in China that was due to COVID-related government lockdowns. Tesla's quarterly revenue of $16.9 billion rose 42% from a year ago, though it fell from a record high of $18.7 billion in the previous quarter, ending the company's streak of record profits. Wedbush analyst Dan Ives said following the earnings report, "In a nutshell, the quarter was better than feared with healthy guidance for the rest of the year, which certainly looked achievable with no margin for error." On the other hand, according to Citi analysts who maintain a sell rating on the stock with a 424 price target, Tesla shares are overpriced and could plunge more than 50%. The current valuation remains challenging, especially when considering that the few other companies that achieved a similar market cap did so by generating on average around $100 billion in annualized gross profit versus Tesla's annualized profit of $20 billion in the first half of the year. The firm points out that several other major tech companies have announced stock splits this year and saw subsequent spikes in their share prices. Google parent Alpha split 20-for-1 in February, and Amazon stock split 20-for-1 1 month later. While a split has no bearing on a company's fundamentals, it could buoy the share price by making it easier for a wider range of investors to own the stock, according to Ally's chief money and market strategist Lindsay Bell. When stocks trade in a so-called comfortable range, everyday investors can more easily afford a piece of the company, which drives more interest in the shares, and more interest means more people trading the stock. For more Tesla stock content, make sure to visit our channel and watch our other videos.